If you want to have a huge impact in this world, it takes money. Poor people aren't changing the world, rich people are. The huge problem in the world right now is that people can't make a decent risk-free rate of return. In the 1960s to 2007, the average interest rate you would get on a government bond was 7%, but now they've reaped the gain. Since 2007, we have had quantitative easing. It's essentially the Federal Reserve creating money out of thin air.
Every time they do a QE, it raises inflation. Every time we did QE1 and QE2, inflation went through the roof, and they know it's going to happen again.
People think that this QE doesn't have a cost. You, the average everyday investor, are literally pumping money into the pockets of Wall Street and global banks. This is a massive robbery. You have to find a way out of that, or you will be victimized by it. For the last couple of years, I've been investigating an area of the market that is producing some of the biggest gains for hedge funds, and that's called quantitative analysis. These are people that build these models that analyze enormous amounts of historical price data, and they can create models that can generate enormous gains in the stock market. You can make $12,000 a month. It takes 12 seconds of work to do it. It is incumbent upon everyone to educate themselves on their own money. Life is so much more fun with money than without it.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
Teeka Tiwari is back on London Real to talk about your money. And more specifically, why it's so difficult to make money these days, because the Federal Reserve is printing it every single day. They call it quantitative easing, but it takes away those guaranteed 7% risk-free returns that your grandparents and parents enjoyed for most of their lives. Luckily, he's got a solution, and it's something called a quantitative stock trading system. This is actually why I was recruited from MIT as a mechanical engineer to Wall Street in the first place, so they could use my skills as a rocket science in order to beat the market at its own gains. And now Teeka's partnered up with a Lockheed aerospace engineer in order to offer those to you. He calls it 12 seconds to $12,000 a month, and it's a brand new way of making money. And I'm super excited to offer this to you. There's a link below, or you can go to londonreal.tv/12 seconds. In this episode with Teeka, we really go deep on this whole concept of quantitative easing, what the Federal Reserve and central banks all over the world are doing to your money, and how you can take charge again with this special quantitative stock trading system. So click on the link below. I've managed to secure spots for you as a London Real viewer. There's only limited spaces available, but I look forward to seeing you at the event. This is London Real. I am Brian Rose. My guest today is Teeka Tiwari, the former Wall Street trader turned stock market, medical marijuana, and cryptocurrency guru. At age 16, you moved from England to New York City with just $150 in your pocket, and 2 years later, you became the youngest employee at the Wall Street investment bank Lehman Brothers. Over the course of your career, you've made millions upon millions of dollars and went on to launch a successful hedge fund. Today, you educate people on how to invest their money in order to achieve financial prosperity. Teeka, welcome back to London Real.
Thank you, Brian. It's great to be back.
Great to have you here. You know, we just recorded a special episode right before this called 12 Seconds to $12,000, which details really a fascinating new trading system that we will not be putting on YouTube. It will not be on our website. But if people are interested, they can click the link below or go to londonreal.tv/12 seconds. I mean, my viewers have loved your trainings from the CBDs to the crypto, and I think this is one of your best yet. So fascinating stuff we just talked about. So thanks for dropping that. For people that haven't yet had a chance to click the link, can you give people a little taste of what we discussed and why this thing kind of came to your mind? Because it was bothering you, right?
Yeah, so before I do a deep dive into that, I want to talk about really the bigger problem right now and the types of solutions I'm looking for to solve that problem. So the huge problem in the world right now is that people can't make a decent risk-free rate of return. And for my entire lifetime, you could always make a great risk-free rate of return. In fact, from the 1960s to 2007, the average interest rate you would get on a government bond, which is risk-free.
Which is risk-free, which means you always get your money back, almost always, right?
Yes.
Never been a default by the U.S. government so far.
No.
So risk-free return would be how much?
7%.
7%.
7%, right? So you could work hard, you can invest your money, buy a portfolio of government bonds, and if you had your bonds reinvest your principal, you could take a $100,000 investment, over 30 years, reinvesting your 7%, you'd have $750,000, right? So
enough to retire on.
Certainly enough to retire on.
And that's what most Americans did for the most of the American century.
Correct. They built their retirement portfolio on bonds and reinvested their money, and then or they built it in equities, and then as they got into retirement age, they'd buy a couple of $1 million worth of bonds at 7%. They'd have $140,000 a year, and they could live. Since 2007, that has all changed. We have had quantitative easing, and quantitative easing is this massive printing of money to go out and buy securities in the open market and then kind of retire them from the market to manipulate interest rates.
Let me just stop you real quick, because when people hear printing money, I think for some people that aren't in the markets, they think, well, is the U.S. literally printing out dollar bills, and are they handing them out to people? Like, what does that mean, printing money?
So printing money is essentially the Federal Reserve creating money out of thin air. So it's the Federal Reserve that creates money. It's not the U.S. Treasury, and it's not the United States. The Federal Reserve issues money in America. And so
that's like some weird entity that isn't owned by anyone.
It isn't owned by anyone. It's actually controlled by banks.
Right, okay.
Right, it's controlled by banks. And it's a private club of bankers. And so what they do, they go to their computer, literally type in $40 billion, and now $40 billion magically appears.
Is that legal?
Yeah, I mean, the Federal Reserve is they can legally create money out of thin air.
They have a mandate to create it if they deem it necessary.
They just created $400 billion to deal with short-term problems in the repo market.
Really?
Right? So yeah, they can create money, literally create money out of thin air. And so what they'll do is they'll now create the money electronically, and they'll credit banks and brokerage firms and buy securities from them. And this is a way for them to inject liquidity into the system, and those banks and brokers then use that capital to either make loans or to trade with. That creates more liquidity in the financial system.
It pumps money into the system, so it raises asset values. So
Correct.
Everything kind of increases in value, which helps the economy keep moving along. Imagine if someone came to you and said they wanted to buy all of your stuff or pay extra money for your house and your clothes and everything.
Right.
You would have more money. You would probably go spend more money.
Correct.
So that's a way they play with it.
That's the way they play with it. But the thing is, people think that this QE doesn't have a cost, or they think that they're not bearing the cost. And what I want everybody to understand is that yes, you are bearing the cost. Real interest rates, so let's say for the last 100 years, the average rate has been 6%. For the last 50 years, the average rate on longer term bonds, like 10-year bonds, has been 7%. The average rate is now 1%. So I went back and I projected the average loss of interest to the average everyday person, the saver. And over the last 20 years, it's been something like $1.1 trillion in lost income, right, that has been shifted from your personal balance sheet to the balance sheet of banks, brokers, and hedge funds.
Okay, so this is interest income that would have normally gone into my account and the account of all the people in America and around the world,
Right,
and now it's
safe.
in the banks instead.
Correct.
And yet there was no robbery, and I don't know it was taken out. They just dropped these rates so low.
So low.
And my
right.
savings account right now, I don't even think I get an interest rate on my savings account.
Well, the people that are really getting punished right now are the people that are entering retirement. Right? Because again, normally they would sell their stocks about 5 years before retirement and start transitioning into bonds.
Because it's safer.
It's safer.
Right.
But now they can't. You know, here in the UK, what is the rate? Like 74 basis points?
Yeah, which for people who don't know, that means about 0.75%.
Right.
Yeah, I don't think I get anything on my savings account right now.
In Germany,
Zero.
the rates are negative. Right?
What?
So you're paying money to buy bonds.
Now that's hard for people to understand, that you would pay money for the bank to hold your money securely.
Correct.
But that's the way, it's that low.
It's that low.
And it's low not because of some weird historical economic reason, it's because of
Central bank intervention. They're going out and they're buying up these bonds, which is raising the price and lowering the yields, right? So it's all government let's not say government, it's all central bank intervention.
Okay.
So this is a massive robbery of people that want to retire or people that want to take less risk. And so people don't think that they're paying for quantitative easing, but they are. You are literally, the average everyday investor, are literally pumping money into the pockets of Wall Street and global banks, right? You're paying for the Lamborghinis, you're paying for these massive sky rises that are going up in London that are all owned by financial firms. You are paying for it.
And is there anything I can do about it?
Well, this is kind of my mission right now, right? Is to help people. What's happening is I've noticed that people are taking enormous risks to try and save their retirement, to have a dignified retirement. So what I've been really building my career around recently is identifying methods and approaches that can allow you to have a dignified retirement, create an income stream without putting your current wealth or your current lifestyle at risk. And that's really the trick. I can't promise the same type of safety that you would get owning a 7% bond. But what I've been doing is looking for strategies that can give you much better returns than 7%, but with much lower risk than you would normally imagine.
Okay, now when you started on Wall Street back in the day, rates were much higher.
9%.
Right? 9%.
Yeah.
And so can just refresh people's minds. I mean, you started on Wall Street when you were 18 years old.
1989.
1989,
Yeah.
right? And you had just come from London a few years earlier.
Right.
In London, you weren't studying finance or anything, right?
No.
Refresh people on your story, because
So-
it's still pretty crazy.
Yeah, so-
when I first met you, I said they're going to make a movie about your life one day, right?
Yeah, so I grew up in the foster care system in London, and when I was 16, I started to age out. So I came to the United States. I was 16, I had $150, and literally the clothes that I was wearing. And it was always my dream to work on Wall Street from the age of 12. And I would cut out pictures of New York City, and I would paste them on the wall and on the ceiling of my foster home. And
In London. So as a kid in
England,
London,
yeah.
you always knew or wanted to go to America.
I always knew that I would live in America, and from the age of 12, I knew I'd work on Wall Street. I didn't know how I was going to make it happen.
Do you ever imagine what would have happened to you if you had not been able to leave London?
I would have figured out a way to leave London.
Okay.
There was no way that I was not going to leave London and get to the United States. I would have figured out a way. It was something that I knew was almost like my destiny. And maybe, you know, people talk about delusional thinking, and that was delusional thinking. At 13 years old, sitting in foster care, being convinced that I was going to go live in New York and go be a wealth manager on Wall Street, right? Absolutely delusional thinking. But sometimes you got to engage in a little bit of delusional thinking that is so far out of where you are in order to get where you want to go.
And you were thinking of this back before there was the internet, back before there was any, a career counselor that would come in and show you a brochure of what you could be as a Wall Street trader. I mean,
Yeah.
There was nothing really. Maybe a movie here or there,
Yeah.
maybe.
Yeah, in '87, but this was before then.
Before that.
Yeah.
Okay. All right, so it's good to be delusional sometimes.
Sometimes it's good to be delusional.
I completely agree.
Yeah.
All right, so that was something, you made it happen. You got to New York City, $150 in your pocket.
Yes.
And you still were on that mission
still was on that mission, so I started working 4 different jobs. I wanted to make as much money as possible. I was living on a couch in Queens at a relative's house. It took me about 6 months. I got enough money together to get my own place. So by the time I was 17, I got my own apartment. I started working. I was working in the restaurant business. I had no skills, right? So what do you do when you got no skills? You go work minimum wage jobs in restaurants. And so I did that for a long time. And when I was 18, I started working at a typewriter supply company, selling typewriter supplies over the telephone, right? And I was painfully shy. I don't know what made me apply for this job, because I just didn't think I could sell at all. And I don't know, I just pushed myself out of my comfort zone, because, you know, working in the restaurant business is tough.
Yeah.
I mean, it's just hard, grinding, physical work. And I mean, I was working my ass off and only making, you know, a couple $100 a week, and it was tough. So I started working selling typewriter supplies over the telephone, and all of a sudden I'm making $300 a week, sitting in an air-conditioned office dialing the phone, and I'm thinking that I've made it, right? This is it. The American dream has come true for me. And at the time, I would always, if I met you, even if we know each other for 5 minutes, I would always tell everybody about my dream about working on Wall Street. I'd say, you know, yeah, I'm doing this right now, but one day I'm going to work on Wall Street.
Interesting. That's like a bit of an affirmation, right?
Yes.
You probably didn't know what you were doing.
No.
But if you tell everybody you meet, you know, first of all, you affirm it to yourself, and then you feel like maybe you have to be held accountable to them.
Right.
It's a great way of doing it.
So I would do it, and I mean, imagine being 16 years old in the restaurant business telling people you're going to go work on Wall Street. I mean, I would get mocked, mercilessly mocked. Oh, you're never going to do that. You wash dishes here. How are you going to do that? And I just had this, again, self-delusional belief. I had this, you know, delusional belief in myself. I had no proof that I would ever achieve any success like that. So it was delusional. There's no question. But my thing was, if I don't believe in me, who's going to believe in me, right? And I remember working in this restaurant, and it was just brutally hot, and the shift was just over, and I finally got a chance to sit down. I opened up the newspaper. I looked around, and I'm thinking, man, is this my life? Is this what I came to America for? To waste away in this kitchen in 100-degree heat for $4 an hour? And I remember thinking, I was just so beat down. And I stood up, I put that paper down, and I said, no, this is not my life. This is a stepping stone. I don't know how I get from here to there, but I know I want to be there. Right? I know I want to be rich. I want to be successful. I want to have a career. I had no idea how to make it happen. But I think just knowing what you want, and knowing what you don't want is not enough, right? Everybody knows they don't want to be in a crappy job. But you gotta know what you want. And if you know what you want, I don't know, something magical happens and you automatically move in the direction of your deepest desire. I mean, I truly believe that.
Yeah.
And that worked for me.
And boom, so at 18 years old, you ended up...
So at 18 years old, I'm selling typewriter supplies. I meet this guy called Kevin Wong and start telling him about how I want to work on Wall Street. And I just keep bending his ear. And finally he says to me, look, I know a hiring manager over at Lehman Brothers. He said, you know, go there, dress up, go there. He said, they'll treat you like dirt, they'll pay you like dirt, but they'll give you a shot. So I went there and I dressed up what I thought was dressed up. You know, I had white socks and pleather shoes and gray pants that were unfinished hanging on the ground. I didn't realize you needed to get them finished. I had a polyester shirt, polyester tie, and I couldn't afford a jacket, so I didn't have a jacket. And so I walked into Lehman Brothers, I mean, looking like a hot mess. Right?
We need to get a picture of that somewhere. Right.
And back then I had longer hair and very scruffy, and I didn't know what I was doing, Brian. You know, I was 18 years old. It was a month after my 18th birthday. So I walk into Lehman and I sit down with this hiring manager called Frank, and Frank was a sweet guy, and he's like, look, you know, you're a nice kid. This is not for you. And I said to Frank, I said, look, I'll work for free. I'll do anything here. Just give me a shot. And, you know, Frank loved that. back then at Lehman, it was like they wanted grit.
Yeah.
Right? More than degrees. They wanted grit.
Yeah, and so for people that don't know, if you had a degree from Harvard, you would go work at JP Morgan.
Right.
But if you were some scrappy kid from Long Island, you worked at Lehman.
Right.
And that was the culture, and they did good work that way too.
Yeah.
There was room for the aggressive, scrappy guys.
Correct.
And so when you said that to them, they're like, okay.
Yeah, we can work with this.
Right.
So they hired me, and I was terrible. I was really awful at my job because my job was to call people up, cold call people up, and then connect them to the broker that I worked for. And I was terrified. Here I'm cold calling strangers, and they wanted to fire me so many times. The only reason they didn't fire me was because of my work ethic. I was in the office before anyone, and I just would take the tongue lashings. I would never talk back. I would never leave my desk. And I was just diligent. And I remember my broker one day saying, you're awful, Tiwari, but I can't fire you because you work so hard. And then...
what kind of tongue lashings were you getting?
I can't even say it here. I mean, it was, the amount of expletives that were screamed at me.
Just
it
the
was
nastiest things you can imagine.
Oh yeah, I mean, phones thrown at me, and just horrible, horrible things.
Yeah.
I never personalized it. I was like, all right, this is just the price I've got to pay. This is the world I'm in.
Okay.
But what happened was I started to get more confident, and then so what I would do is I would call my friends and I'd say, hey, can we role play this out? Like you play the customer, I play the guy calling you, and be mean to me and help me get through this. And then so I started training on my own, started practicing, and I started getting better. And then I started getting good, and then I started adding value. And
you were basically selling stocks to what, institutional investors?
No, these were high net worth.
High net worth investors.
High net worth investors.
So you started learning the game with stocks.
Yeah. Yes.
And then you also started learning about interest rates, and back then they were higher.
They were. Yeah.
At a point where people could invest their savings in government bonds risk-free and have something to kind of save away.
You could live your whole life off it. Yeah,
Right.
I mean, if you worked hard and you saved $1 million, $2 million, you'd have a six-figure income. And you live very comfortably in the 80s and 90s on a six-figure income. No problem.
Right.
Yeah.
And what else did you learn from the stock market back then? Like, what were some of the lessons that you immediately saw that were obvious, that maybe you could even pass on to other people?
Yeah, so buy the rumor, sell the news. That was a very hard lesson I learned when I was about 19 years old. I had built a huge position in a stock, and it was rallying before the news. I was buying it for a news announcement, for an earnings announcement, and it had rallied really nicely. And the guys around me were saying, "Okay, Teeka, it's time to take profits. It's time to no, the earnings are going to be great. The earnings are going to be great." No, Teeka, you got to understand. You buy the rumor, you sell the news. I don't even know what that means. And then, so what happens? The earnings come out, and the stock's down 15%. And the earnings were amazing.
Yeah.
The earnings were amazing.
Yeah. And so for people, as an example, say the Apple stock right now is trading at 300, and the earnings are coming up, and you think the earnings are going to be even better than what the market says. So you're buying, and the stock is going up because you're like, oh, I must be right. Everyone else knows it's going to be better.
Right.
And so you keep buying. Now, a seasoned Wall Streeter will say, sell this before the number comes out, before we know the earnings. And a junior guy would say, no, it's going to be a great number, and then it's going to go up. Right. So then for everyone that doesn't trade stocks, when the good number comes out, that maybe the earnings are double, you sit and you're thinking, oh, now the stock's going to pop 20%. But the stock price drops. And for a newbie, it doesn't make any sense. But the truth is that all of that anticipation and belief that the earnings are going to be great is already priced into the stock.
Right.
And then when the actual news comes out, even though it's better than expected, it's actually maybe the same or less than what the market had priced in.
Had already priced in.
And so that used to happen in government bonds as well. And then it drops, and you're sitting there thinking, well, what's going on? Because it doesn't seem logical.
Correct.
And this is one of the many things Wall Street insiders understand that the public will probably never gets told.
Correct.
Especially back in the day.
Yes.
And so, all right, so these are some of the lessons you learned.
Yeah, so these are some of the lessons. So I learned that Wall Street, the stock market is a leading indicator. It will tell you, it will move 12 to 18 months before an event actually happens. So another thing happened was we were in the middle of a recession in 91, no good news had come out yet, and then the market had started rallying. And I'm like, oh, this is wrong. Why is the market rallying? And I kept out of that early part of that rally because again, I did not understand that the market was discounting the recovery to come, right? That if you wait for the confirmation from actual economic data before you get involved, you will miss 70% of the move, right? So this understanding that the market is a leading indicator, understanding what the market looks for to determine when the trend has changed, these things transformed my ability to make money in equities.
Wow, that's fascinating. And you know, when I joined Wall Street, one of the first big events that happened at the end of '93 was that the Fed had not raised rates for a long time. And it was a big party on Wall Street. Everyone was making a ton of money being long these government bonds and just making all these great gains and returns. And then all of a sudden, out of the blue, the Fed raised rates. I think it might have been actually early '94.
Yeah, it was between '94 and '95.
Yeah, and I was this new kid, and it was, I think they raised rates a quarter bip from 3% to 3.25%. Again, back in the day when there was some yield in these. And for me, it was like 25 basis points, a quarter. You wouldn't even notice that in your savings account. And yet, it shifted the entire market because
it slaughtered the bond market.
Slaughtered it because for people that don't understand, it told people that the Fed, if it was going to make a move like that, it was also probably seriously concerned that it would need more.
Yeah.
And that's what happened. It ended up more and more and more, and it completely changed the shape of the curve. And tons of people lost money. Tons of our clients at Bankers Trust lost a lot of money. And that was interesting to see how one little movement by the Fed showed that they were actually fearing a lot more. And then the markets went back.
That '94, '95 bond bear market was horrific.
Yeah.
Was horrific. A lot of guys lost a lot of money during that period.
Yeah.
I remember it.
And it was interesting to watch how it all happened. But, you know, the day before, everything was fine.
Yeah.
But, of course, it wasn't.
Correct.
And if you look back, you can say, oh, there were indicators and all these things. But that's the other thing about Wall Street is that, you know, a few days and a few moves, and now everything becomes obvious that it was in a tricky situation. So for people that are listening that are like, okay, Teeka, unfortunately, I didn't grow up in the same place as my grandparents and my parents, where I could at least stick money away risk-free. That way, if I lived to be 90 years old, I could at least have an income.
Yeah.
Like, what do they do? Because they can't just go out there and start randomly trading stocks. When it comes to things like crypto and CBD, you say, okay, put a small percentage of your portfolio in there, which just makes sense.
Yeah.
But then what do you do to try to make up for those returns?
So what I've been doing for the last couple of years is I've been investigating an area of the market that is producing some of the biggest gains for hedge funds. And that's called quantitative analysis, right? They're called the quants.
Yeah.
And so these are people that are not Wall Street people. A lot of them come out of NASA. They're rocket scientists, they're mathematicians, PhD statistics people. And what they'll do is build these models that analyze enormous amounts of historical price data. And all they do is work off price data, and they can create models that are highly predictive and can generate enormous gains with great regularity in the stock market.
And you're saying some of this commodity data goes back hundreds of years.
Yeah, some of it goes back.
So hundreds of years to watch how all these different things behave. And again, if you want to try to think of all the inputs in a market, well, there's actually probably an infinite amount.
Correct.
But you've got a bond price, a stock price, a commodity price, a weather pattern, global economy, different GDPs of different countries, all of that adds it to what might happen to the market.
Yeah.
And these quants look at all of this data over time, and they do like these weird regression analysis.
Correct.
And try to learn from that data, right?
Yes.
And I was actually hired on Wall Street as kind of one of the quantish kids back when it was a derivatives world.
Okay.
So they came to MIT and they recruited us. I was a mechanical engineer at MIT. I didn't really have a lot of finance trading. And they brought me in to trade these derivative contracts, but we hadn't yet got to quantitative trading. I don't think the computers were that fast, or that maybe we didn't have the data.
90s,
Not in the 90s. So I missed that wave of quants. But I sat next to a bunch of PhDs, and you know, we made a lot of money with those PhDs because we could price things in the market that no one else could. Again, the first options pricing, Black-Scholes model, was just an eye-opener for people because they could see what an option was really worth.
Right.
And so tell me more about these guys, because some of these hedge funds they figure this stuff out sometimes before anyone else does, right?
Yes, they do, and this is it's still an area of the market that not a lot of people really know about, but it's an area that I've been fascinated with. But the thing is, there's a lot of folks that will say they've got a black box or they got a trading system, and you dig deeper into it, and it just doesn't stand up, to the test of time, or it's been overly managed for just a few years of data. So I spent 2 years looking for someone that I could partner with that had a really long track record, that was using data that wasn't hyper-fitted to just the current market, that was data that was going back decades and in some places centuries, that had a great track record. And somewhere where we could say, okay, we can allocate a relatively small amount of money on this and create a regular income stream. And yeah, I found that guy. I mean, it took me 2 years to find him, but I found him.
And these, I mean, correct me if I'm wrong, but these quant guys regularly outperform some of the greatest investors that we always talk about.
Oh yeah, they crush them.
Like
yeah.
Warren Buffett,
Yeah.
they say he's the best stock trader of our generation.
Yeah.
But these quant guys sometimes run circles around that, right?
Well, yeah, I mean, Buffett, I think his long-term return is around 15% now. But you've got guys like James Simons, who runs Renaissance Technologies. I mean, their average gain, I think, 71%.
71%
Annual gain.
That means if I put in $1, I get $1.71 the next year, and compounding.
Correct.
Over time, that's ridiculous money.
And they've compounded for decades. I think there was a study done where they said if you put $10,000 into his fund originally, it was worth $153 million.
153 million.
Yeah, versus 173,000 if you put in the S&P 500. I mean, we're talking massive outperformance.
Wow.
I mean, these outperformance to such a degree that it's not, it's statistically significant. You can't have outperformance like that over multiple decades by accident.
Okay.
Right? You've got to be doing something that works.
And is this a high-speed trading thing, or is this more of a quantitative analysis, like understanding what's going on in the markets and the algorithms?
Yeah, it's a great question. It's not high-frequency trading, which the average person is just locked out of that, right? You have to have enormous capital and enormous resources just to even get access to that data that would allow you to do that. So this is more, this is trading, right? So this is owning something for anywhere from 2 days to 60 days, and using these signals that tell you when to buy, when to sell, when to take a profit, and when to take a loss.
Right, okay,
Yeah.
gotcha. And look, I mean, we're probably going really deep into this, but if people want to go even further and understand the details of this, there's a link below where they can go to londonreal.tv/12 seconds. I guess I better answer the question, why are you calling it 12 seconds?
Because it takes 12 seconds of work to do it. And in our testing, our back testing, you can make $12,000 a month. So we're saying, 12 seconds to $12,000 a month. I mean, it is remarkable. And what I love about it is again, you don't have to put your current lifestyle at risk. You don't have to take outlandish risk. And because of the risk on each trade is so well defined, you can put more money into it, unlike crypto or unlike cannabis. So I would never tell anybody to go all in on crypto or go all in on cannabis. I mean, my standard parameter there is no more than 5 to 10% of your liquid net worth. They're just too volatile for you to put, let's say you're worth $1 million, put $500,000 into it. I mean, you'd lose your mind. But with something like this, where you've got the back testing, you've got the predefined risk on every single trade, you can put a lot more money to work in it.
Yeah, very interesting. And so, from what I understand, the algorithm kind of looks at all of these different signs. It's almost like, not like a tea leaf reader, but it's like looking at these things, and when everything is in a predictable pattern,
right,
it sends you that alert or that email and says,
yes,
this is the time, and that's why it's the 12 seconds.
Correct.
And if that's not happening, it says don't do anything,
yeah,
right? So
correct.
You're not going on and placing bets just to place them.
No, you'll get an alert, it'll go to your phone, it'll go to your computer, you push a buy button to do the trade, and you're done. That's it.
And I mean, you spent the last few years traveling the world, talking to people everywhere.
Yeah.
And you're privy to a lot of different trading strategies,
Mm-hmm.
Teeka, and that's why I like having you on the show, because you're unlike anybody I know and anybody out there. But you've come to this conclusion as the one that people should go to if they want to basically create something for their retirement. I mean, the average Joe out there, I mean, what are their alternatives?
I mean, the alternative is you've got people speculating in Forex, you've got people speculating in options in the stock market, you've got people reaching for income, but they're taking enormous risk in order to do that. I would rather say, go get a side gig, go build your own business, right? Go do something that invests in yourself before you take outlandish risk. So for me, I take this responsibility very seriously. I never want to be in a position where, because of something I've said or recommended, somebody has negatively impacted their life. Like, I remember what that was like. In 1998, I lost everything during the Asian financial crisis, millions and millions of dollars. I mean, I had to file bankruptcy 2 years later. It was horrible.
What does that feel like for people that don't know?
I can tell you that I was...
And you were high on the hog before
Yes.
that. I mean, you were telling me about the place just out of Wall Street with the double ceiling...
Yeah, the floor-to-ceiling windows overlooking the East River. I remember doing the math on whether I should throw myself in front of the train when I was in Grand Central Station, thinking, my wife will get $2 million in life insurance benefits. And
that's a real conversation you had with
yourself? It was a real conversation I had with myself. I had one small child and another child on the way. And I was thinking, okay, that money that she'll get, it'll be protected. My creditors won't be able to touch it. She'll have it. And I remember doing that math.
That's really scary.
Yeah.
So you know what it's like, devastating losses like that to someone.
Devastating losses.
Okay.
Right? Devastating losses, losing everything, having to sleep in a friend's bedroom, having my wife having to go back to her family. Yeah, I know what that's like. I know what it's like to be where I remember in the morning I had a car and it was a lease and I couldn't pay the lease, but I needed a car, and I would have to park the car half a mile away, and I would park it so the plates would be covered. So I would never know if the repo guy was going to get it or not, right? So in the morning, when I would walk to the car and it's there. Okay, the repo guy didn't find it. Like, I remember what that was like.
Yeah.
So I never want anybody ever to be in that position because of something that I said or recommended, which is why I'm such a nut about risk management, about saying, hey, if you don't have enough liquidity to do this, don't do this. Don't reach. Never ever risk your current lifestyle for the promise of a future lifestyle. Don't ever do that. You don't need to, right? I
totally agree with you. I see these Forex trading systems out there. And I mean, I've never been a believer of that. I've seen it happen for years. I used to sit next to the Forex traders at Bankers Trust. When I did my rotation in the bank, I sat next to the dollar mark trader. This is before the euro existed. Yeah. And these guys were insane. I mean, they were trading these markets that would just move around. Trade numbers would come out, this would come out, it was up, it was down, and they had a hard time making money. Take some random Joe somewhere without all that inside information in a bank. I'm sorry, you're going to get smoked. Smoked. And yet, people are reaching for these things because, like you said, there's no more 7% risk-free income. Yeah. What else are you going to do? You're going to go try to punt on stocks? Right. Okay, if you don't have a trading system or a quant to help you, there's not a lot of options out there. Correct. And so I see people make silly decisions. Yeah. And that always worries me. I do that.
It worries me. I mean, I was a professional making silly decisions, right? Going all in on every trade. And it worked for 10 years. But it works until it doesn't. And when it doesn't, it's devastating. So I just want to show people, there's a middle path. You don't have to take outlandish risk to move the needle on wealth creation in your life. If I have any message, that's my message.
Okay. Now, you've tested this current quantitative system, and it's just been performing in a ridiculous way,
It's been doing incredible numbers. And what's interesting about it is if you look at the stock market for the last 4 months, we've had a lot of volatility, but we've essentially gone sideways, right? There's been no trending action. Right, so if this
which means if I held stocks, I wouldn't make any money
right,
that way.
Exactly.
Okay.
Right. So you've had this maybe 2.5% to 4% trading range, but we're essentially at the same place we were a few months ago. So if we had had a deeply trending market and this system had been doing really well, I probably wouldn't be here. I'd say, you know what, I need to wait and see how this thing does when the market is stagnant. And the market has been stagnant. And yet this methodology has found positive volatility for us to profit from in a stagnant market. And that's really hard to do, right? Like if you really, like let's say I have no interest in what you're talking about, Tiwari, and I want to build my own system, I'll give you a tip. See how the system does in a flat market. If it's making money consistently in a flat market, you've got a great system. If it's not making any money and it's dependent on massive volatility, you probably don't have a great system.
Right.
And so to me, this has passed the litmus test, and which is why I'm here talking about it.
And so you took the question out of my mind, which was my devil's advocate. What's to stop me from creating my own system? Because, you know, well, obviously you got some smart guys and the rocket scientists.
They're literally rocket scientists,
right.
yeah.
But why can't I create my own system? That's what I'm asking.
You can. You know, I created my own systems for years, and I'm pretty smart, and I have access to huge resources, and I did well, and then I didn't.
Yeah, that's
right?
the problem. You do well until you don't.
Until you don't.
And when you don't, it's a bad day.
We're talking $250,000 like that.
Yeah.
Right? I mean, like that. And what I realized for myself is I just don't have the depth of the domain knowledge to create a robust system. I don't. And it's easy to convince yourself that you do. You run a couple of numbers and you do some back tests. But the mistake I had made was overfitting my data, right? And it's a huge mistake people make. So this is the reason why I partnered with somebody that's been doing this for 40 years and has an amazing track record for 40 years. I mean, you see how many different markets we've had over 40 years. And to consistently make money algorithmically for that period of time is very rare.
Right. And
very, very rare.
And you're convinced that this guy is something that's a cut above anybody else.
Yeah, I mean, I've spent 2 years vetting him
Yeah.
before even talking about him publicly.
And you're also limiting the number of people that are going to have access to this.
Correct.
And this is maybe something to explain to people, because if you get too many people knowing about the right trades,
You degrade the system.
Yeah, it actually degrades the trades.
Yeah.
Because you can't get 1 million people in at the same time, or all of a sudden the prices are gone and the opportunities are gone.
Correct.
Can you explain that, how that works to people?
Yeah, so you have a certain edge, right? But if you have too many people chasing the same opportunity, your edge disappears because the price moves so much that you can't make the same profits that you could make before. And the other thing is, Brian, is I realize this type of approach is just not for everyone. And I know this is never going to be a mass market thing, but it's so fascinating and it's so effective that I just wanted to give people an opportunity to at least learn more about it. You know, whether they end up working with me or not, it's something that they should know about, especially as they look at other systems that might be out there in the market that they can compare it to so they can make their own decision as to which way they want to go. But yeah, it's something that I have to keep small in order to keep the integrity of the signals intact.
Yeah, and that's why you're doing this free live training event
Yes.
that's happening. And if people want to go to it, there's a link below, londonreal.tv/12 seconds, where you just kind of show people what this is about.
Yeah, so I'm going to show people how the system works. We're going to show it live. And then we're going to give people a window into what the system is saying will happen in the markets in the next 6 months. So we'll talk about areas to avoid, areas to look at, and I don't know if we're actually giving actual trades, maybe. We'll see if there are any trades actually available at the time and that the system has. But yeah, we want to give people a deep dive on what we're doing, how we're doing it, but more importantly, we want to give you an education on how to make decisions about this type of methodology of investing.
Yeah, and that's why I think it's important that people attend this training, because, like, let's be honest, gone are the days where you can outsource your financial future to an advisor.
You can't.
Honestly,
they're idiots.
Yeah, honestly, you never could.
Yeah.
But you, back in the day, you thought you could.
Right.
And they would, rob you of all these fees, but because rates were so high, you would come out with something on the end, and you thought I did okay.
Yeah.
But you can't outsource that these days. And I had Kim Kiyosaki in that chair, which is the wife of Robert Kiyosaki. Mm-hmm. Some say she's the brain brains behind a lot of the real estate investments. Robert would probably say that as well. She's very good. And she said, Brian, it's important for everyone to understand all of these different trading mechanisms. And she said, and people come to me and they say, oh, I don't know anything about these assets. She said, okay, buy one gold coin. She said, buy one gold coin, maybe it's $20 or $100, and hold on to it for a month and watch the price and see how much it's worth. And now you are an experienced gold trader. Buy a small amount of crypto. Buy, a real estate asset. Buy one share of a stock. And now you start to really feel it because, as you and I know, every one of these has a personality.
Right.
It's grumpy on one day, it's happy on the other day. Some days it's regular, some days it disappears for a while. And that's why I would say the same with a trading system. Like a quantitative trading system will really open your eyes as what it could do for your portfolio.
Yeah.
And the truth is, you got to learn about this stuff because
You do.
You're going to be managing your money for the next however old you are. Even if you're old these days, it could be another 50 years.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.
Hi, my name is Brian Rose, and I've just wrapped filming of an exclusive episode with my friend and former Wall Street trader, Teeka Tiwari, about a special quantitative stock trading system that will not be available on YouTube, social media channels, or even our website.
I've noticed that people are taking enormous risks to try and save their retirement. I've been investigating methods and approaches that can allow you to have a dignified retirement, create an income stream without putting your current wealth at risk.
It's called 12 Seconds to $12,000 a month, and I've secured for you, as a London Real viewer, free access to this groundbreaking wealth creation event. Now, as a former Wall Street trader myself, I understand the massive financial gains possible from the right quantitative stock trading system. In fact, that's exactly why I was recruited from MIT, to use my skills as a rocket scientist to help beat the markets.
These models analyze enormous amounts of historical price data, and they can generate enormous gains in the stock market.
Now, Teeka has partnered up with a former Lockheed aerospace engineer to give you access to the single most sophisticated system I have ever seen outside of Wall Street. Teeka told me he's on a mission to create more millionaires from ordinary people than any other investment analyst in the country.
It is incumbent upon everyone to educate themselves on their own money.
But don't take my word for it. Click on the link below or go to londonreal.tv/12 seconds to attend this exclusive event, where Teeka will be explaining this new quantitative stock trading system. Unfortunately, there are only limited spaces available, so act now to secure your spot, and I will see you at the event.